All right, good morning, everyone, and welcome to our second quarter webinar, Taxable Services in Texas. My name is Melissa Schultz, and I will be your moderator for today's event. First off, today's webinar's presentation is intended as a general guide and not as a comprehensive resource on the subjects covered. It is not a substitute for legal advice. So I want to go ahead and introduce our presenter for today's webinar, Alyssa Mangold with Tax Policy.
Hello, everyone, and thank you for joining me today. As Melissa said, my name is Alyssa Mangold, and today we will be discussing taxable services in Texas. The Texas Tax Code, Section 151.0101, talks about 17 broad categories of services that are subject to tax. Now, 17 services would be a lot to cover in 1 hour, and I don't think y'all want to be here all day. So today, we will just be talking about 5 of the most common services. Let's get started. The 5 services we'll be talking about are amusement services, data processing services, real property services, non-residential real property repair, remodel, and restoration, and personal property repair and maintenance. If you provide any of these taxable services, you need to have a Texas sales and use tax permit and charge your customers sales tax. Let's go over the topics that will be discussed throughout the presentation. So today we'll get into what activities are included in the 5 taxable services categories we're discussing. We'll also talk about tax exemptions or exclusions for each taxable service. And finally, we'll see how sales tax is applied to these services. Let's go ahead and dive into our first one, amusement services. Amusement services provide entertainment, recreation, sport, pastime, diversion, or enjoyment that is a pleasurable occupation to the senses. That sounds like it covers a lot, right? And it does. Let's go over the types of amusement services. The first section of amusement services covers live or recorded performances. This can include concerts, ballet or theater performances, and circuses. Keep in mind that I can't mention all types of live or recorded performances, but just because it's not listed doesn't mean it's not included in this definition and taxable. For example, a puppet show is not mentioned in the amusement services rule. However, it definitely meets the definition of providing an amusement service. It's a live performance. The next one is admission to exhibitions or displays. Some examples are admissions to auto shows, aquatic shows, antique or craft shows, museums, and zoos. Spectator sports are also amusement services. This includes sporting events and automobile or motorcycle races. Living in Austin, we have tons of spectator sports. We have our Texas Longhorn games, our Formula One racetrack events. The racetrack even hosts concerts, which, like I said before, are taxable as live performances. Other amusement services are participatory sports or games. These include golf course fees, skating rink tickets, or driving range admissions. It also includes gym memberships. Next, we have fairs or carnivals. It may seem a bit obvious, but this can include amusement parks, games of skill like carnival games where you toss a ring around a bowling pin, and shooting ranges. So we've covered a lot of specifics, but like I said, just because the rule doesn't specifically state something is taxable doesn't mean they don't meet the definition of an amusement service. Other taxable amusement services include tourist attractions like monuments and caverns, sightseeing tours, country clubs, fortune telling, and rides for pleasure, such as hot air balloons and bike tours. You've probably seen these tours around town, people pedaling around on one big bike, maybe visiting some restaurants or breweries. The total cost for each of these amusement services must include sales tax or have sales tax added to it. This also includes any of those extra fees like processing, shipping, or convenience fees. Let's say you sell tickets to your bike tour for $22, and there is a $3 maintenance fee on each ticket. You have to charge sales tax on the total of $25 to your customer. However, this does not include a gratuity or tip unless it is a mandatory gratuity in excess of 20%. Now that we've covered taxable amusement services, let's go over what are considered non-amusement services. Non-amusement services are activities that are primarily instructional in nature or non-taxable personal services. Examples of these include instruction in a sport or musical discipline like karate, personal training, art lessons, or music lessons for any age, camps for children, both day camps and boarding camps, fishing and hunting guide or lease services, and hobby clubs like stamp collecting, camera clubs, and knitting clubs. Another type of non-amusement service is a standalone transportation service. Some examples include taxis, Ubers, Lyfts, or any other transportation service when it is not attached to any type of taxable event. So we covered taxable amusement services and we've covered non-amusement services. Now let's look at amusement exemptions. Everyone loves an exemption, right? Exemptions from sales tax on amusement services include coin-operated machines, occasional sales, and certain nonprofits and governmental agencies. Let's look at each of these a little more closely. A charge to play coin-operated machines, which are activated by the consumer, are exempt from sales tax. These classics can include pinball machines, pool tables, video games, and jukeboxes. These days, pinball machines might be hard to find, but most of us can remember spending hours in an arcade. When we say coin-operated machines, this also includes all types of electronic devices that require the customer to insert a coin, bill, token, electronic card, or check to play a game, music, or pleasure machine. As a note, there's no sales tax on the charge to play these coin-operated machines, but you may need to hold a license for coin-operated amusement machines if you have one of these devices. See our coin-operated amusement machines webpage for further information on this separate registration. Now, let's look at when amusement services can be provided tax-free. Another type of exemption is an occasional sale of an amusement service. We define an occasional sale of amusement services as a sale of 10 or fewer admissions to an amusement service during a 12-month period by a person who does not hold themselves out as engaging or does not habitually engage in the sale of amusement services. An example of this exemption is a new band who wants to see if there's any interest in their music, so they sell 10 tickets to a concert. 10 or fewer admissions are not subject to sales tax. Another exemption for amusement services are amusements that are provided exclusively by a nonprofit organization other than a 501c7 group. These include Kiwanis clubs, labor unions, and ex-student organizations. Examples of 501c7 groups that are not qualified for this exemption and must collect sales tax on their amusement services are fraternities and sororities, country clubs, and social clubs. An example of a nonprofit providing an amusement service is a school's PTA selling tickets to a school carnival. These tickets are tax exempt when the event is provided exclusively by the nonprofit PTA. All tickets and advertising must show the organization as the sole provider of the event and that the event is exempt from tax. However, if the proceeds benefit an individual that is not a purely public charity, the exemption no longer applies. The exemption is also lost if the amusement service is jointly provided by both a nonprofit and a for-profit entity. In addition, A nonprofit that is organized to encourage agriculture by maintaining public fairs and exhibitions also qualifies for the sales tax exemption on their amusement services. Examples of these are Future Farmers of America or livestock shows. The next taxable service is data processing. Data processing is a very broad category that includes many different activities and is always a service performed with a computer using a customer's data. Let's look at some examples of what services fall into this category. The first one is data manipulation, like entering, editing, or formatting a client's data. This includes lots of things having to do with websites, like website design and development, website hosting, and maintaining, modifying, and updating website content. It can also include search engine optimization and software as a service, or SaaS. Next, we have producing reports from a client's data, like creating a best sellers list from the sales records your client gave you. This also includes preparing W-2 forms, payroll tax returns, and payroll checks. These services, even if provided by a professional, are taxable because you are manipulating data provided by the client. We do have other types of exemptions for certain services professionals provide, and we'll discuss those later in the presentation. Accounts payable and receivable services are also taxable data processing services, as are transcription services, scanning documents, and others. Some other examples of taxable data processing services are check preparation, computer-aided drafting when the client provides the specifications, data conversion, and word processing services. Some of the more popular data processing services these days are internet services. Like I said before, this can be anything from creating, editing, or maintaining a web page to providing server space or cloud data storage online. Other examples are social media services, like creating or maintaining a Facebook page for a business. For example, let's say a local boutique hires you to create and maintain their social media accounts. This would be a taxable data processing service. If they provide you with exactly what they want you to post, all you have to do is copy and paste. This is still taxable data processing. However, freelance writing and creating original writings or posts are not taxable. One interesting thing about data processing is its tax exemption. 20% of the total amount charged for data processing services is exempted from tax. Say I wanted to create a web page for my favorite local restaurant, and I charge them $100 for this service. I would only charge sales tax on 80% of the charge, or $80. Now this is a bit unusual, so let's see how this would look on a sales tax return. I would report my total sales as $100 and my taxable sales as $80. Taxable purchases for this example are 0. So line 4, total amount subject to tax, is $80. Now that we've covered taxable data processing services, let's look at some non-taxable ones. Internet advertising, like a banner ad or vertical advertisement, or a text link that simply redirects a user to a different site, are not subject to tax. This includes placing an advertisement on a web or social media page, like Facebook or Instagram, that belongs to someone else. For example, say I want to start an online directory of local restaurants. I create my own web page, then charge restaurant owners a fee for being listed on my website. If I just have a list of restaurant names and a link to their website that I did not create, the fee is not taxable. I'm not creating anything for them, just charging a fee to be listed. If I charge a fee to make a web page for the restaurant that I will then list on my directory, then the charge is taxable as data processing. Other examples of non-taxable services are services by a licensed court reporter or notary public. These may include preparing depositions and other court documents for a participant in a lawsuit. Preparing federal income tax returns and state tax returns, such as sales and franchise tax, are also not taxable. I do want to point out that while preparing W-2 forms and payroll tax returns are taxable services, the law specifies that federal and state tax return preparation are not taxable. Transcribing medical dictation or records. I mentioned on a previous slide that transcription services are taxable, but there is a specific exclusion for the transcription of medical records or dictations. Standalone consulting services, which are charges for a person's professional opinion or suggestions. These consulting services must be sold by themselves and not in relation to or with any sales of taxable items or taxable services. For example, you are hired to create a web page for your client's new business. When you present your idea to the client, they decide they don't like the direction you were going and choose not to buy the page from you. This is non-taxable consulting, as the client did not actually purchase the web page. But if they do like your work and purchase the page, then they have purchased taxable data processing services and taxes due on the entire charge to the customer, including any consulting fee. Other non-taxable services include auditing and inventory counting services, processing geographic or seismic data, preparing financial statements, and interpreting a client's data without manipulating it in any way. When you provide a professional service, like engineering, accounting, auditing, or proofreading, to name a few, and use a computer as a tool to complete that service, your charges are not taxable. For example, when you use a computer to prepare a federal income tax return, the charge to your client is not taxable because you are using your knowledge of accounting principles and tax laws to prepare the return and just using the computer as a tool to provide your service. The same applies to an engineer who creates an original design using their expertise and knowledge of scientific engineering concepts like principles of mathematics and physics. They are providing a non-taxable service and must pay tax on goods and taxable services used to provide that service. If the engineer is only providing engineering services and it is not related to a taxable item or service, then the cost of their service is not taxable. Now that we've covered taxable and non-taxable data processing services, let's talk about the next taxable service, real property services. The term real property services covers a wide array of taxable services, including waste collection or removal, structural pest control and extermination, janitorial and custodial services, landscaping and lawn maintenance, and surveying. Real property is a structure that is embedded in or permanently affixed to the land or affixed to a structure constituting real property. For example, this happy yellow door is affixed to the building, which is real property. The first real property service we will look at is garbage or other solid waste removal. Garbage or other solid waste includes waste, refuse, sludge from a waste or water supply treatment plant or an air pollution control facility, and other discarded material, including solid, liquid, semi-solid, or contained gaseous material resulting from residential, industrial, municipal, commercial, mining, and agricultural operations, and community and institutional activities. Next, let's discuss some services that are not included in this definition and not taxable. Non-taxable waste removal services include lots of services that are regulated by other federal and state authorities. These services include solid or dissolved material in domestic sewage or irrigation return flows, or industrial discharges permitted by the Texas Natural Resource Conservation Commission as stated in the Texas Water Code, Chapter 26. Waste materials which result from exploration, development, or production of oil, gas, geothermal resources, or any other substance or material regulated by the Railroad Commission of Texas, as stated in the Natural Resources Code, Section 91.101. Any radioactive waste, which requires specific licensing under Health and Safety Code, Chapter 401, and the rules adopted by the Texas Board of Health. Waste identified as hazardous waste by the United States Environmental Protection Agency or by other appropriate federal or state agencies, and industrial solid waste as defined in Health and Safety Code, Chapter 361, except industrial solid waste, which meets the definition of garbage or municipal solid waste. Keep in mind, if you mainly handle hazardous material and are permitted to do so, but take a job removing domestic sewage, your license to handle hazardous waste does not mean that the domestic sewage removal is not taxable. The tax treatment is based on what type of service you're providing, not what you are licensed to handle. Waste removal services purchased by a developer, contractor, or home builder as part of the build of a new residential property are tax exempt. This exemption also applies to the construction of model homes that will be sold for residential use in the future. You must keep some kind of documentation in your records, whether it's the invoice, contract, or an exemption certificate, showing that this is a new residential build. Residential structures include a house, apartment complex, or nursing home, anywhere that the residents consider their home. The exemption does not extend to a building used as an office. Also included in real property services are structural pest control services. Some examples of structures are homes, office buildings, farmhouses, and bridges. Taxable structural pest control includes activities to identify, prevent, control, or eliminate insects, birds, weeds, or undesirable animals like mice or rats. Be aware, an inspection for pests is subject to tax, even if no pests are found. Pest control services performed on timberland or agricultural land are tax exempt. A farmer or rancher can claim tax exemption by providing an exemption certificate if the pest control service is being performed on their farm or agricultural land. They cannot, however, provide an exemption certificate for pest control services performed on residential land that may be next to their timberland or agricultural land. Pest control services purchased as part of the build of a new residential property are also tax exempt. This exemption also applies to the construction of model homes that will be sold for residential use in the future. Again, you must keep documentation in your records showing that this is a new residential build and the exemption does not include a building used as an office. For example, taxes due on a charge for termite control services in a sales office, even if it's located inside the residential development. That all sounds familiar, right? We just talked about it with waste removal, and we will see this exemption a few more times today. If you operate a janitorial, custodial, or swimming pool maintenance service, you are providing another taxable service. Janitorial and custodial services like window washing, chimney cleaning, trash collection indoors or outdoors, and parking lot sweeping or cleaning. They also include building or grounds cleaning, like pressure washing a building, sidewalk, or parking lot. Charges for minor adjustments or maintenance of heating and air conditioning systems, like cleaning or changing filters, are also taxable if they are provided as part of your custodial service. There is no tax on charges for a self-employed person providing housekeeping services for a residence. So services like house cleaning or cooking that are done by one person hired by a private household are not taxable. We consider this person an employee of the household, not a taxable service provider. When you provide non-taxable services, you must pay sales tax when purchasing items you are using to perform that service. However, this exception will not apply if you take on a contract for a commercial business, like an office building or hotel, or if you start working with an employee or partner in the future. If your business changes in these ways, you must apply for a sales tax permit and charge your customers Texas sales tax. Just like the pest control exemption, cleaning services purchased by a developer, contractor, or home builder as part of the build of a new residential property are tax exempt. This exemption applies also to the construction of model homes that will be sold for residential use. Again, the exemption does not include sales offices, and you need to keep proof that it was a new residential build in your records. If you provide landscaping, lawn care services, or plant care, you are providing another taxable service and must collect sales and use taxes. Landscaping and lawn care and plant care services include any work you do to maintain or improve lawns, yards, and ornamental plants and trees. Any care for outdoor plants, trees, and flowers are included as taxable services. These services are called softscaping. Some examples include planting, trimming, watering, relocating and removing plants, trees, or flowers, as well as fertilizing services and other maintenance activities like tree trimming or tree surgery. Identifying, preventing, or curing plant diseases, planting, mowing, trimming, and edging grass or other ground cover, and planting and maintaining flower gardens. As a reminder, maintaining can also include watering or removing flowers. And as always, there are some services that are not taxable. Let's look at those now. Non-taxable landscaping services include mowing services performed on pipelines, highway rights-of-way, or cemeteries, trimming trees away from power lines for safety purposes, and services performed on farm or forest land like harvesting, cultivating, mowing, and fertilizing. And just like all the real property services we've looked at so far, landscaping provided to someone building a new residential structure can be provided tax-free with proper documentation. This next exemption is one of the more popular ones. It applies to self-employed individuals of any age who pass a three-pronged test. The individual must perform the actual lawn care or landscaping services themselves, have no employees or partners providing the services, and have gross receipts from their services of $5,000 or less during the most recent 4 calendar quarters. If your income from landscaping and lawn care as a self-employed individual exceeds $5,000 during the most recent 4 calendar quarters, you must start collecting tax on your services on the first day of the quarter after the threshold is exceeded. If your gross income from these services is under $5,000 for the most recent 4 calendar quarters, the exemption resumes on the first day of the next quarter. For example, let's say I started a lawn care business in April of 2018, and I'm operating it by myself. If my income from April 2018 to March 2019 was below $5,000, I do not have to charge sales tax. However, if I look at my books at the end of March and see that I've made $6,000, I need to start charging sales tax beginning April of 2019. Hardscaping services are not considered or taxed as landscaping services. Hardscaping services are taxed either as new construction or repair or remodel of real property, depending on the situation. Examples of hardscaping include creating or repairing decks, retaining walls, fences or pools, or the installation of underground sprinkler systems. Even though these services may be taking place on a lawn, they are not considered landscaping. Be sure to separate landscaping charges from charges for hardscaping if you provide both types of services, because different tax treatments can apply. Now let's get into one last real property service, surveying. Surveying services include activities performed to determine or confirm the boundaries of real property, or to determine or confirm the location of structures or other improvements in relation to the boundaries of the property by the use of relevant elements of law, research, measurement, analysis, computation, mapping, and land description. Examples include, but are not limited to, boundary recovery, residential surveying, lot surveying, title surveying, as-built title surveying, and right-of-way surveying. It does not include activities performed after taxable surveying is completed to search the surveyed area for items of archaeological or historic significance. And surveying services do not include surveying services performed by a landman. Landman services that are not necessary to negotiate or secure land or mineral rights for acquisition or trade are not real property services and are not taxable. These include determining ownership, negotiating a trade or agreement regarding land or mineral rights, drafting and administering contractual agreements, ensuring that all governmental regulations are complied with, and any other action necessary to complete the transaction related to a service described other than an information service. If, however, a landman sells copies of their blueprints, they are selling tangible personal property and must charge sales tax on that sale. Okay, now we've covered all the real property services, so let's move on to services that involve repair, remodeling, and restoration of real property and tangible personal property. Determining whether you are repairing real property or tangible personal property can get tricky. Let's discuss the three-pronged test that can help you decide what you are working on. The first question is, how is it affixed? Is it built into or part of the structure? If the item or structure would be destroyed if we attempted to remove it, it's real property. The second question is, how was it fitted or adapted? Is it made for or custom fitted into the structure? And the third question, what was the intent? Did the building's owner intend for it to be part of the real property? Let's take a look at some examples. As you see here, we have a small kitchen in an office building acting as a break room. In this kitchen, we have items that are real property and some items that are tangible personal property. Let's go through this kitchen and see which items meet each definition. First, let's take a look at what we consider tangible personal property, or TPP. The stools are definitely TPP, right? They are not affixed to any structure. The rug, again, is not affixed to the property. I could move it around with my foot if I wanted to. The accessories on the counters, these can simply be picked up and put anywhere. And just to go a little further, if there was a microwave simply plugged into the wall and sitting on a counter, that would also be considered tangible personal property. And those are just a few examples in this picture of items that are considered TPP. Any repair or work performed on these items is taxable. Next, let's look at the items that are considered real property. First, we have these light fixtures. The light fixtures are attached to the property. Next, we have the cabinets. Cabinets are built in and firmly affixed to the property. The built-in island, that is, again, affixed to the property and would cause major damage to the floor if we tried to just pull it out. And our last example, the sink. These are all parts of the real property. So now that we've worked out how to tell the difference between real property and tangible personal property, we're going to first look at non-residential real property repair, remodel, and restoration. Replacing, upgrading, sporadically maintaining, or generally changing existing non-residential property are all included in this service. All charges are taxable to the customer for this work, including labor and material charges. Non-residential real property includes commercial establishments like restaurants, offices, manufacturing facilities, farms and hospitals, as well as parking lots and retention ponds. Non-residential does not include property used as a residence, such as apartment complexes and nursing or retirement homes. When you perform any of the following types of jobs on non-residential real property, the entire charge is taxable. The type of contract you use to bill your customers, whether lump sum or itemized time and materials, does not affect the taxability. These jobs include partially rebuilding real property, upgrading any part of an existing structure, like trading old carpeting for wood flooring, or upgrading a backsplash in a hotel's kitchen, replacing any part of an existing structure, like replacing a light fixture that has gone out of style, and repairing damaged, broken, or defective parts of a structure. Examples of this are re-roofing and repainting. Repair, restoration, or remodeling of non-residential real property does not include the addition of new usable square footage. Adding new square footage is considered new construction and is taxed similarly to residential work. For example, if you are hired to add a new wing to an office building or hospital, this is new construction. You can find its tax treatment in the contractor rule, Rule 3.291. Certain activities that qualify as real property maintenance are also exempt from sales tax. In order to qualify as maintenance, the purchaser must provide proof that the services are scheduled, periodic, and necessary to prevent the property's decline. This can be supported by maintenance schedules, work orders, or other forms of evidence. If you provide non-taxable maintenance, you owe sales tax on all taxable items used while providing your service, such as incorporated replacement or repair parts and materials. Real property services do not qualify for this maintenance exception. Real property services such as landscaping, pest control, janitorial services, those do not qualify. Most landscaping crews are on a set schedule, typically every 2 or 4 weeks, but this does not make it tax-free maintenance. Labor charges for the repair, remodel, or restoration of real property that was damaged in a declared natural disaster area is tax exempt. Any charges for materials are still taxable to your customer. The business must be in an area that has been declared a disaster area by either the Governor of Texas or President of the United States for the exemption to apply. The labor must be charged separately, otherwise the entire job is taxable. Your customer must give you an exemption certificate, Form 01-339, stating that the property was damaged in a disaster area to keep in your records. This exemption does not extend to waste removal services like hauling away any damaged materials. And as I said, only the labor is not taxable in declared disaster areas, and the charge needs to be separated from any materials cost in order for the exemption to apply. Let's look at some example invoices for separately stated and lump sum disaster area work. If you use a separated contract showing labor and materials separately, only the materials are taxable. In this example, for simplicity's sake, we're saying that both the labor and the materials, replacement shingles, are $900. Because the labor and materials are separated, we only charge tax on materials, which totals to $1,874.25. However, if you charge a lump sum and give your customer one cost for labor and materials together, the entire thing is taxable as simply repair, remodel of real property. This means you will charge sales tax on the entire charge of $1,800, which comes out to a total of $1,948.50. So you can see here how it benefits your customers if you use a separated contract, like in the top right in this instance. Want to learn more? Another resource you may want to explore is our series of contractor videos that give a general overview of contractors' tax responsibilities. You can find these videos on our Comptroller YouTube channel, which is TX Comptroller. All right, now that we've covered non-residential real property repair, let's look at tangible personal property repairs and maintenance. Repair or maintenance work performed on tangible personal property, or TPP, is taxable. TPP is anything that can be seen, weighed, measured, or touched, and that we can perceive with our senses in any other manner. This includes services like appliance repair, furniture refurbishing, jewelry repair or cleaning, and dog grooming. Now I know pets are our friends and our family, but they are considered personal property when they are purchased or groomed. And just like we discussed, labor charges to repair, remodel, or restore tangible personal property that was damaged in a declared natural disaster area is tax exempt. The items must be in a location that has been declared a disaster area by the Governor of Texas or President of the United States for the exemption to apply. For example, if someone hires you to repair their water-damaged dining room table and china cabinet after a flood in a natural disaster area, you can accept an exemption certificate for the sales tax on any labor charges. Now, the tax treatment of any of the services we've talked about may change depending on how you invoice your customers. Let's say your client hires you to provide both a non-taxable and a taxable service. You have two choices. You can bill it all as one lump sum and give the client a flat fee for both services, or you can give a separated invoice and list each service and its price separately. If you charge one flat price for the contract and the taxable service represents 5% or less of the overall price, but is not separately stated, you do not need to collect tax from your client. However, if more than 5% of your fee represents taxable services, your total charge is taxable unless you separately state the charges for taxable and non-taxable services. If you separate the charges, you should only collect tax on the taxable portion. At times, you may purchase services to resell to your customer, such as third-party maid or landscaping services. In this case, the third party will bill you, and you will bill your customer. You can give the third party a resale certificate instead of paying tax on the sales price for the service because you are reselling their services. You must then collect any tax from your customer. On the flip side, if someone is reselling your services, that person or company may give you a resale certificate instead of paying tax on the job. Once you have a resale certificate in your records, the responsibility for collecting any sales tax passes to your customer. So we covered that resale certificates are used with services, but you can also use them in other situations. You can give your suppliers resale certificates instead of paying tax on materials that will be resold to your customers, like potted plants a landscaper purchases to resell to and leave with their customer. The resale certificate is the front of the exemption certificate, Form 01-339, and they look very similar. The resale certificate does require a sales taxpayer number and information about both the purchaser and the seller. Now let's talk about a common question we get: how to handle contracts with tax-exempt organizations. Some nonprofits and other organizations are exempt from paying sales tax and will give their service providers or vendors an exemption certificate instead of paying sales tax on taxable services or items. Examples of tax-exempt organizations you may contract with are governmental entities at the local, state, and federal levels, and qualifying religious, educational, or public service organizations that have received tax exemption from the Comptroller's office. Keep in mind, an exemption in another state does not automatically transfer as an exemption in Texas. Out-of-state entities must apply for Texas tax exemption as well. Organizations claiming tax exemption must give their service provider or vendor an exemption certificate or a government contract or purchase order. Either of these documents are acceptable to keep in your records as proof of your exempt customer. I've mentioned the exemption certificate several times, so let's take a closer look at it before we wrap up for today. An entity purchasing items or services tax-free must provide an exemption certificate for you to keep in your records. It is page 2, or the back, of Form 01-339 and is available to download on our website. You can keep these type of records in physical or digital format as long as the records are easily accessible. The purchaser is the exempt organization, so their name, address, and phone number should be shown at the top. The purchaser is not an individual, it is the organization itself. And unlike the resale certificate, we do not require a taxpayer number for the exemption certificate to be valid. The seller is you. You are selling the item or service, so your information goes in this middle section. Here, the purchaser needs to provide details about why they are claiming the exemption. Usually, purchases by exempt organizations must be for items or services that further their exempt purpose. So when an organization is claiming an exemption, this is where they would justify it. And remember, exemption certificates are accepted on good faith. And the last thing to cover on the exemption certificate and in this webinar is that you do not send a copy of an exemption certificate to our agency. These certificates should be kept in your records as the seller, and the Comptroller's office will ask to see copies of the certificates should the need arise. And that wraps up our taxable services webinar for today. If you would like to learn more on Texas taxes, we offer various resources on our tax training resources webpage, such as our taxability videos, podcasts, seminars throughout the state, and of course, we offer these quarterly webinars covering a variety of topics.
So that is all the time we have today. I apologize for going over slightly an hour. If you have follow-up questions, please submit them to tax.help@cpa.texas.gov, or if you want to talk to a tax analyst, call 800-252-5555. Thank you again to our attendees and our presenter today, Alyssa Mangold. All right, guys, y'all have a great day.